Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month lead and tin. LME 3-month lead. The pattern that's been dominating the recent action here is the late September to late October last year bullish shift pitchfork. It's highlighted in purple on my daily chart. This bullish pitchfork had been a pretty good, bar a couple of minor breaches, and it is at this point that I introduced the supports that had, until recently, been very effectual in holding up the recent decline, some of which can now be regarded as resistances. Even now, some may still revert to supports despite the pummeling they have received. First off, the lower tine, currently at 21.31 of the bullish pitchfork. Yesterday was the second consecutive close below it, and this puts it at serious risk of being retired. Next we have two moving averages. The slowly declining long moving average currently at 20.66 and the rising medium moving average currently 20.99. Finally we have the January 2020 high at 20.39 that was approached but not tested back in January this year. As I said earlier, the second close below the lower tine puts it at serious risk unless the market chooses to run up the underside of this lower tine, which I have seen in the past in some markets, but right now, here it seems unlikely. Add to that the resistance provided by the new January to date downtrend, currently at 21.50, that is highlighted in bright red on my daily chart. This downtrend is a three-pointer, I note, and thus we may have the beginnings of the end for the bullish pitchfork. Finally, to add onto all of this, I pointed out something 2 weeks ago that may happen, and indeed has now happened. That is, we had a monthly key reversal down in January. Thus, watch the January 2020 high at 20.39. It is close enough to the incomplete and unfulfilled as yet neckline, highlighted in dark green on my daily chart, currently at 20.36, that should the market get down that far, then there is a possibility that this bullish shift pitchfork may have spawned a November last year to date head and shoulders top. Caution. LME 3-month tin. The move up from the turn of October into November last year rose into a series of stratified resistance levels that slowed but did not halt the market's rise. The major ones were and still are all at the following levels: between 23,000 and 24,155, at 21,360, at 24,35 to 25,10. Since Christmas, the market has broken higher through the 2013 high at 25,250 and the 2012 high at 25,875, the lesser Fibonacci line at 27,330, the 2011 high at 29,010, the lesser Fibonacci line at 32,50, at 32,05, and finally, the interesting 50% Fibonacci line, the March 2020 to March 22 move at 31,845. I said some 3 weeks ago that this last level of 31,845 would be the real test of any rally, and so it proved to be, as prices did not break up over this 50% Fibonacci line, but only just breached it with one single close over before heading lower, gapping lower indeed. 3 weeks ago I drew a November 2022 to date uptrend, currently at 29,240, which I had highlighted in dark blue on my daily chart. I said at the time, and I quote, it would not surprise me to see prices dip down to this uptrend, to at the very least to gather some further ammunition for a potential move upwards, end of quote. Well, prices dipped down to this uptrend at the end of 2 weeks ago and opened underneath it last week. Since then, prices have continued to stay below this uptrend, such that I'm minded to at least relegate it from a bold line to something more reasonable for next time. Instead, the market has travelled sideways along the lesser Fibonacci line at 27,330. I'll now reprise what I call my big thought, a part of my commentary from 3 weeks ago that I think is still relevant, and a thought that is still valid even if prices drop down to the lows of October last year, or else move up and bounce further higher off the broken uptrend. So, I quote, "Then there's the big thought I'd like to ponder again, if you will. And an even bigger thought I'd like to share. 9 weeks ago, so this is now obviously 12 weeks ago, I said, and I quote, "The action since late August has caused me to think that perhaps the action is a possible descending scallop pattern. I would like to see more on this to be sure, but right now it looks a lot like that to me. I'm minded, therefore, to give just a provisional idea on the upside for such a pattern, assuming, of course, it does not peak and revert back down, which would also be in line with this pattern. But for a continued move higher, you would have to look primarily in the 25035 area, and possibly later on should it continue up to 27475. I'm not ready as yet to start naming targets for this pattern, but it's worthwhile being prepared just in case, as I can easily discard these if they prove unsuitable." So that was the big thought I indicated back then. And I'm pleased to say that we have seen the market reach all the relevant targets of what I renamed the small descending scallop pattern. Now comes the new bit. What if, and this is a big if, the action since March last year is part of a really, really, really big descending scallop pattern? In this pattern we have seen the move lower, and now we're on the upslope of the ski slope, or inverted J pattern. Thus, if the rise does halt, and it may not be that soon, then perhaps, just perhaps, we can start measuring for a further big move lower or higher. And that's the end of the whole quote. I continue now from today. The problem of being on a cusp of a market is recognizing it's only a cusp in hindsight. However, I'm minded to think carefully about all the action you can see on the daily chart. Though while we may not be on the cusp of such a pattern as I have detailed, we seem to be awfully close to such a cusp. Therefore, watch carefully. Caution.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.